Did you know that an expert predicts that Tesla stock will increase by 10 times in the worst case scenario? Some could argue that the stock's current valuation is already at an all-time low, so you wouldn't want to miss this opportunity, says content creator Stephen Mark Ryan, who deals with financial issues. Issue Stephen also emphasized that he is a true bear case for Tesla at $921 per share. This is prior to the split. After the split, that would be around $307 per share, which is more than double. Tesla stock's current valuation of around $125. Imagine a 300 bear case for Tesla stock is still more than double today's valuation in the stock market, as many are aware of and as is reflected in the company's stock performance in the market. The YouTube channel is a bear case for Tesla stock this year, which is $420 per share. However, note that this prediction was made prior to the stock split. After the split, that would be $140 per share. As a result of opponents blaming Tesla CEO Elon Musk primarily for his increasingly unpredictable choice to run Twitter, Tesla stock is plunging. Although Tesla has been a monster stock for most of its history, particularly from its stratospheric run from mid-2019 to late 2021, investors are growing increasingly concerned about Musk's Twitter distraction. The company stock has been a big loser in 2022 and is on track to plunge 57% as of mid-December, which would easily surpass 2016's 11-fold, the only other annual decline since Tesla stock went public in 2010. The EV behemoth has lost over half of its worth since late September as a result of the sell-off getting worse when Wall Street reduced price expectations. Targets on the electric car manufacturer saw a spike shares a few days ago, but Tesla shares fell 8.12%. Analysts worry that Elon Musk, the CEO, is preoccupied with his hostile takeover and micromanagement of Twitter, and that China's sales will be impacted by the country's decision to relax its strict restrictions on the spread of COVID-19. Analysts say that investors are worried that Musk will sell more Tesla shares to fund Twitter and that his antics on the social media platform are harming the EV maker's brand. Musk has notably recently sold around $3.5 billion worth of shares, one of many stock dumps the CEO has done this year. As a result, some investors are calling on Tesla's board of directors to replace Musk as CEO in order to step in and protect shareholders from the stock drop. Tesla's shares hit a more than 2-year. The value of not having a terrific CEO is now reflected in the price of Tesla shares. Portfolio manager at Gerber Kawasaki, Ross Gerber, tweeted, "Time for a shakeup at Tesla. Customers' opinions regarding Musk's Twitter activity may or may not have had an impact on Tesla EV sales. After all, Teslas are still regarded as good cars by most standards for safety, technology, and battery range." Even though deliveries are expected to reach record highs in Q4, concerns about declining demand are reportedly growing for Tesla. It should be noted that the company lowered prices in China in late October and announced a number of incentives to clear out inventory, but wait times are practically at zero. There are also frequent reports of increased production in Shanghai. Even so, Tesla has refuted them. Tesla might bet on a strong quarter for sales in Europe, but it could reduce backlogs before January 1st, 2023. China and Norway are ending their EV subsidies, and Germany is significantly reducing its subsidies. Sweden just terminated its EV subsidies, and the UK is also terminating its program. Along with some brief price reductions in the UK, Tesla is providing free supercharger kilometers as part of a year-end push into Europe. This comes as China's EV rivalry heats up with more and more models from companies like BYD. Positively, the European TV market is becoming more congested as Tesla's aging Model 3 and Model Y are challenged by Neo Leado and other models. Up to $7,500 in U.S. tax credits will be available to Tesla for each vehicle. Potential customers are delaying orders or deliveries, meaning that Tesla still confronts significantly less competition in its home market than it does in Europe and China. Before the year ends, Tesla is offering $3,750 off Model 3 deliveries across the board, in addition to 10,000 free supercharger miles. Beyond Tesla, there are worries about the demand for EVs globally due to a faltering global economy and high EV costs, which could slow the adoption of EVs generally in the upcoming years. To put it plainly, Tesla's stock is underperforming, but it is not the only aggressive stock to have a poor 2022. Particularly, Tesla's electric vehicle competitors have suffered, such as Neo stock, Liado, Rivian, and BYD Rivian. October lows The SP 500 and NASDAQ Composite are back below their 50-day moving averages, indicating a significant decline in value for the year. Tesla's CEO Elon Musk attempted to explain why Tesla shares are plunging, attributing some of the decline to macroeconomic factors. Even though longtime Tesla bull in the aforementioned tweet, Ross Gerber stated that Tesla's stock price now represents the value of not having a CEO. Elon Musk responded, saying that when interest rates on bank savings accounts approach stock market returns, which are not guaranteed, people will gradually shift their money from stocks into cash, which will cause stocks to decline. In order to fund the Twitter acquisition, Musk famously sold billions of dollars from Tesla holdings, including a $3.6 billion transaction earlier this month. Since late October, Musk has been concentrating on his new position at Twitter. In order to sell cars in China, where it has a major factory in Shanghai, Tesla has been offering discounts and incentives. The company is also battling to improve efficiency of its new factories in Austin, Texas, and Brandenburg, Germany, as well as enduring supply chain issues common to the auto industry and rising energy prices in Europe, which may make battery electric vehicles less appealing to many drivers. These issues are in addition to those that led Mizuho Securities and Evercore facing in their efforts to lower Tesla prices. In a note published on Tuesday, a Mizuho Securities analyst stated that in the near future, there may be a decline in Tesla sales due to macroeconomic challenges and waning customer demand for more expensive TVs. The company maintains its long-term bullishness on Tesla, noting the company's new factories as a competitive advantage and upcoming new electric car tax credits in the US that could spur domestic demand in China, where certain credits are set to expire at the beginning of 2023. The company rates Tesla shares as a buy with a price target of $285. Joshua White, an assistant professor at Vanderbilt University and former US Securities and Exchange Commission economist, told CNBC that interest rates are only partially to blame for the decline in Tesla's valuation. Crucial element is the overhang on Twitter. Another important factor is China, whose future openness is still up in the air. Given the rise in COVID cases and interruptions, there is pressure on supply as well as demand in this market. Additionally, he stated that Elon Musk may have lost the trust of investors when he announced in April that he didn't intend to sell more Tesla shares, but proceeded to sell billions of dollars more. Musk appears to sell equity in very large blocks, saying things like, I'm done and I'm not selling anymore. But the more times he says such things and sells more shares, the less confident investors will be that the price will rise. Musk then replied to a tweet implying that he won't even consider the possibility that his actions affect the stock price, in which case buying opportunity, my belief is that Fed rate is insane since the data I'm seeing indicates that we are already experiencing deflation. If this is accurate, the real rate of return on T-bills would be similar to the ESP 500. A wise investor I spoke with today informed me that he is shorting SMP in the event. Stephen Mark Ryan's bear case of approximately $307 per share materializes from the stock's current valuation of approximately $125. For more Tesla stock forecasts, make sure to subscribe to this channel. Tesla stockholders will undoubtedly be happy.